What's going on, guys? Today we're going to talk about a fund that I recently came across. It used to be very popular a couple years ago whenever it first came available onto the market. And let's just go ahead and dive into it here. So the fund that I'm going to be talking about today is Nationwide's Nasdaq 100 Risk Managed Income ETF. So their strategy is pretty much buying the underlying index, the Nasdaq 100, but they're also kind of wanting to hedge that in the form of covered calls and naked puts. So we'll go ahead and dive into it here. Let's just take a look at the performance real quick. The whole market was down pretty big today as July 24th, but this fund was down 2.21% over the day, down 3.42% the past 5 days. Past month is down negative 2.23%. 6 months, it is actually up 6.69%. Year to date, it's up 10.93%. 1 year, it is up 13.54%. And then over the past 5 years, it is actually down negative 2.31%. I wanted to look at this website. They have a pretty unique. It actually calculates, the performance of this fund whenever you pretty much drip the dividends. So we're going to compare it to the Nasdaq 100. Let's go ahead and quickly look at that here. So the inception date for this fund was December 20th, 2019. So not quite 5 years, but right around 4.5 years, you would have had a total return of 34.7%. Do keep in mind when we looked at that price return of the shares, you're actually down negative, it was like 2 or 3%. So if you do drip your dividends, in this case, I do think this is probably before taxes are kind of included here, but I'm not sure how this calculator accounts taxes. But let's just say it doesn't for this illustration video. But needless to say, you are definitely underperforming the Nasdaq 100. But that's kind of as expected. This is an income fund with some hedging going on. So let's go ahead. So yeah, needless to say, you are underperforming, the Nasdaq by quite a lot. But yeah, this is definitely not a growth fund, and it's hard to really compare it to the Nasdaq 100 just because of the objective of this fund. So just quickly looking at Nationwide's website, NAV year to date 17.72%. That might have been before today. It dropped a good 2% there. Okay, so here's the fund characteristics. It targets a high monthly income, a rules-based options trading strategy that seeks to produce high income using the Nasdaq 100 index. May offer a measure of downside protection, employs a constant, fully financed market hedge that seeks to reduce downside risk. So that's kind of what I was talking about. You're almost selling like a collared or some type of hedge to downside. Potential flexibility across markets, employs a systematic approach that may aid in capturing gains and minimizing losses. Expense ratio is pretty high, 0.68%, but they are doing a good bit of work here. So they're, this is a complement to the 60-40 allocation. So if you're at that point in your life, where you're 60% stocks, 40% bonds, this could be a potential investment that you could look into. But do keep in mind, I'm not a financial advisor, so make sure you use this information for educational purposes only. Yep. So here's the growth of $10,000 starting back in December of 2019. You're almost a little over 14, probably sitting like 14 and a half. Here's the fund and management team. Yeah. So here's a little bit of their investment process. So they purchase the Nasdaq 100 index. Then they deploy their collar strategy that provides a constant, fully financed portfolio hedge. So yeah, I think they're selling the covered call, getting the premium, and then using some of that premium to buy the naked put for the hedge. So steps 2 and 3 are explained. They're selling a near at the money or out of the money Nasdaq 100 call option with the intent of generating premium, using a portion of the premium received to purchase a fully hedged portfolio that seeks to protect the downside. So today, that downside protection definitely helped them out. Okay, cool. So look at the holdings. They got Apple, Microsoft, Nvidia, Broadcom, Amazon, Meta, Tesla, Alphabet, Costco. Pretty much the same structure as many other funds out there. Their beta is a little bit under the 1. So do keep in mind that S&P 500's beta is 1. So anything below that is, supposedly the volatility is not quite as high, and it's not going to react 100% to the S&P. So their yield is right around 7, almost 8%, 7.75%. So you do have to subtract the expense ratio a little bit there. It looks like they're right around 7%. And then this is kind of like what the monthly distributions are. So 0.65%, so 14 cents a share, 13.64, 13.64, 13. So pretty consistent. 15, 15, 15, 15, 14. So yeah, that pretty much sums up this fund. Once again, this is NUSI, Nationwide's Nasdaq 100 Risk Managed Income ETF. They pay on a monthly schedule. Their category on Morningstar is derivative income. Kind of like we mentioned, the purpose of this fund is to produce premium income, as well as hedging to the downside. So like if we're in a bear market, this fund has the potential to potentially do better than some other funds. But yeah, guys, want to just kind of put this in here at the last point. This is don't use this video for financial advice or anything like that. I'm not a financial advisor. Use this for educational purposes only. Go look up this fund, see if it makes sense for your for your risk tolerance, for your time horizon. NUSI, it's a high yielding monthly income ETF, and like I mentioned, it's a little less risky than some of the other ones because it's buying that hedge or that put position with part of the covered call premium. All right, guys, that's it for today's video. Once again, go take a look at this ticker, NUSI, managed by Nationwide. Yeah, guys, let me know what you guys think down below. Please like, subscribe, comment. Let me know if you like this fund, if there's other income funds that you're investing into. Would love any type of feedback down below.